Hi, welcome again to another edition of Market Analysis for today, February 5th of 2025. I'm Gio Benacourt, and this is a recording half an hour prior to the U.S. session open, recorded on by Vantage Markets. All right, so let's get right with it. So we saw yesterday, look at this market swings. These are just extreme swings that you don't have any direction. And therefore, if you are on the wrong side of the trade, you would have gotten, blown your account out right out, or would have made money. During these times of uncertainty, it is best not to trade those markets that have wild volatility, such as the indices right now. We saw yesterday how even though the market opened gap up, it tanked, then it recovered, it fluctuated to the upside, and then it's still closing the red. Today we have open gap down. Okay, it has been closed, but we are within just basically now you can just really just say within this prior swing, and really wow, what a swing that was. So that's when the obviously the tariffs came into effect, and whatnot. This obviously right here. So let's just see. I will advise not to be trading the indices this week. Obviously, we're going to be having a lot of volatility coming out due to NFP and ADP numbers coming out. So it's best to stay out of these markets for now until we have a direction. The S&P 500 is more in tune, is better, has a tighter, more organized fluctuation, if you will. The market has opened with a tiny gap down as well, has been closed, it's basically being flattish. So again, even though companies are going to be obviously in their reporting, and one of the things that just came out, Alphabet shares slide on revenue miss, so therefore they most likely obviously bring the index down, which is the Nasdaq. So for now, I'll be staying out of them. Look at the Dow is just basically also the Dow and the S&P are more in tune, but the Nasdaq is just really wild. So I wouldn't be trading those anyhow. Then we have crude oil. So crude oil yesterday, it fluctuated below a level of support, $71, and a little bit more deeper into 70 and higher numbers, 77. And therefore, it did close in the green. It recuperated. It closed in the green. And today it opened with a small gap up, and it's fluctuated to the downside today. Now, this could also be information coming out prior to the numbers coming out later on, about an hour and a half from now. The EAI report. So that number, whether it's be positive, then meaning if the number comes out that the increment of production inventories rose last week, then we'll probably see a fluctuation to the downside, as obviously the market is having more inventory. But if we do see a negative comparison to the prior week, which was positive 3.5 million barrels, so we see that this week, the report for last week comes in negative, then we could probably see a recuperation of crude oil and trying to come and fluctuate above that $73. But we have to wait until that happens, an hour and a half from now. Nat Gas is also, just basically there. So what could we expect today? Well, their report comes out tomorrow. It opened with a gap down. It has been particularly close. So we could probably speculate some movement, sideways movement on the Nat Gas. Lateral movement. Gold. Okay, well, gold is just spiking it up. So here we have gold. So therefore, what can we do? Well, again, in this case, this is all new territory. All right, so let's just use 1, 2, 3, 4, 5. Let's just use the low from here to the extension to the high to where the market is right now, but the low, swing low. So there we go. How much of this trend will it extend? Well, let's use the Fibonacci numbers, 0.38%, and the golden ratio number. That's all the probable levels of resistance for gold. That's what they are, using the trend-based fib extension tool. Now, as far as support goes, here you can come in and look at previous highs, but this previous high, the market is already there, so you might want to take a look at this one and just use that as your probable level of support, and then that swing low, the previous swing low, as another level of support, and there we have them. And what happened to the oh shoots, I deleted the line. Okay, so I gotta draw it again. So from this low to this high to where the market is at right now, I'm around there. Okay, so why has it done this? Okay, let's do that. Okay, here we go. There we go. Okay. Now we have, I keep on thinking that is a tool that I have selected to delete, and it's not. Okay, here we go. Now we have it. Okay, those are the levels of resistance for gold, copper. Copper is enough also. Just let's see copper previous movements. All right, so copper making a double top as we speak. So let's just use this level right here, the probable level of resistance in 32.5. Just shoots at me right there. Okay, there we go. And then support 318. I mean, we could also use this triple top right here. This triple top right here. That's a nice level of support, and a swing low from yesterday. So there we go. RSI is getting closer to being overbought. So target 32.5. First target. Copper. Well, that was copper. Sorry. Then Bitcoin. Right. So Bitcoin is right below, right above our level of support. 96,000 is gonna be. Let's use the 50-day moving average. Let's use the 20-day moving average, and let's just keep that as where it's at. So when we see a fluctuation to the upside, and we have been just very tall candles on Bitcoin. So I assume today is going to be a recovery day. All right, so the euro is finally rebounding from this low of 102. So it's making nice higher highs, higher lows, third consecutive day. So let's just use this swing high here, and let's use the upper Bollinger Band. So probable level, second level of resistance, or second target. First target is going to be 104.68. Let's see if that will be met. Now the pound is also pounding away. So let's use the 50-day moving average as our second, and then upper Bollinger Band as our first. Then we use 124.5 as our first level of support, and the 20-day moving average as our second. There you go. It is moving higher. Fantastic. Dollar index dropping. And so it is, let's use 107, psychological round number. And let's use the 20-day moving average as our probable level of resistance. As the market moves lower, the dollar index moves lower, we will see a nice continuing push to the upside on the currencies and metals. That's it for you today. Have a great trading day. I'll see you tomorrow.